Welcome back to DukascopyTv. Now, the Cyprus deal, as it's widely been referred to, may be the last act in the fractional reserve banking system. Joining me to discuss further is Dr. Frank Hollenbeck. Frank, thank you for coming in. Pleasure to have you, as always. Now, as we saw in Cyprus, banks continue to take excessive risks, which makes the government have to come and bail them out. What is wrong here? What is the underlying problem with the banking system, would you say?
Well, let me ask you, suppose that you were to bring clothes to a dry cleaner and you found out that the dry cleaner actually wore your clothes for 5 days before he gave you the clothes back. How would you feel? Or if you went to a hotel and you gave your car keys to a valet and you found out that the valet lent out your car to teenagers who use the car to joyride, how would you feel? And you wouldn't be too happy, right?
No, not particularly.
No. And the reason is that what we have here is what is called a bailment, in the sense that you have ownership of the car or in the clothes, and you're just giving it to someone for safekeeping, okay? You retain the ownership. Now, in the 18th century, suppose that you had 100 ounces of gold, and you wanted it to be safe, so you brought it to a goldsmith. And the goldsmith gave you in exchange 10 tickets. And on each ticket, it said the person who turns this ticket back in will have 10 ounces of gold. Now, what would happen is that instead of bringing the tickets, getting gold, paying for goods and services, ultimately what you would do is just kind of use the tickets instead of the gold. This is where we have what is called the development of near monies, in the sense that the ticket replaces the gold, okay? So we have the creation of near monies. Now, what will happen is that the goldsmith, all of a sudden, he'll realize, gee, you know, he's never coming in and getting his gold. He's just using my tickets. What I could do is just create, you know, another 10 tickets and loan it out to somebody else. Okay. I mean, it's not my goal, but I can, you know, commit fraud and make a lot of money. Okay. And this is what we call the creation of the fractional reserve banking system, and how banks, in this case the goldsmith, can create money out of thin air. Now, the goldsmith, or we can call him a bank now, is somewhat limited in the sense that he has to have enough gold, because sometimes we will come in and exchange our tickets for gold. So he can't just run out of gold. Okay. The second thing is that maybe the two individuals who get together and figure out that there's actually 20 tickets for only for a claim on 200 ounces of gold, and there's really only 100 ounces of gold. And there we have what is called a bank run, but the bank run just really reflects the fact that the entire banking system is actually quite fraudulent. Now, what happened in the early 1800s is that the government said, oh, gee, you know, this is a great source of financing. And they basically made this fraud legal, just like we have in the case of Foley versus Hill, which basically says is that when you put money in a bank, it's no longer your money. It's the bank's money, and they can do anything they want. They can go to the casino and play Russian roulette, okay? The only requirement the bank has is to run a Ponzi scheme, in the sense that they just have to give you your money when you come and get it, in the sense that they can take it for somebody else and give it to you, okay? So we've had the government basically support the system because the government depended on the system. Now, obviously, we've had problems with this fractional reserve banking, and the government has tried to control it. Okay, for example, when it created the concept of a lender of last resort, it actually made things worse. It's kind of like saying, well, you know, the government now will give you the gold that you need. So what do you do as a goldsmith or a bank? Well, you're going to commit even more fraud, because you know that when you need gold, you can get your central bank buddy to give you some. Okay. Then we also created things such as a deposit insurance. Well, what does deposit insurance mean? It means that the goldsmith can even take more risks, because if things go sour, we basically have privatized the gains and socialized the losses. And in the 1930s, when we had the bank runs, instead of shutting the banks down, okay, and recognizing that what they were doing was doing fraudulent activity, what we did is we had banking holidays, okay, and now we have capital controls, just like we have in Cyprus. Cyprus. Also, we have that the governments have tried to, quote, regulate the banks because they recognize that what they've done is they've created this monster, this fraudulent monster, which is called the fractional reserve banking system. But the problem with regulation is a bit the same problem we have in cycling. There's a lot greater incentive for the cyclists to cheat than for the organizers to try to catch them. Now, a lot of people say that these banking problems is a failure of capitalism. Capitalism has nothing to do with fraudulent fractional reserve banking. It's just the opposite. Capitalism is a defense of property rights, and it is not crony capitalism, which where we have the government basically protecting the banks.
Now, you mentioned bank runs. If we take Cyprus as an example, there's been fear obviously of deposit flights, but given that depositors under 100,000 euros were not touched in the Cyprus bailout, has this averted a bank run in this case, would you say?
Well, as I said in my previous interview, I think we're going to see a slow motion bank run in the rest of Europe. But for me, imposing the capital controls was actually worse than giving a haircut to deposit of over 100,000 euros. Let me give you an example. Suppose that you have, I don't know, 30,000 euros in your bank account. So you're protected because you're under the limit of insurance. Okay, but I tell you that, well, you know, it's a possible that we're going to have capital controls and that you won't be able to get to your bank account for maybe 2 weeks, and then you may only be able to draw a little bit of money out of that for the next 2 years. What are you going to do if all of a sudden there's a rumor that things may go sour in Spain or Italy? What's the first thing you're going to do?
Take your money out.
You're going to take your money out. Yeah. So in other words, what we've done is we've created an incentive for bank runs in the future. And you have to realize is that anyone who has over 100,000 euros at the moment in either a Spanish or an Italian bank should be moving their money to a more safe to a safer bank. For example, a German bank. I would not be running, if I was a finance officer of a small to medium sized company, I would not be running my working capital management through either a Spanish or an Italian bank. But what will this do? Well, we're going to have money moving to Germany. Okay, so what will happen is the deposits will leave Italian banks. Okay, to pay those deposits, what will the Italian banks have to do? Well, they'll have to sell government debt. Okay, and people have to realize is the only way Italy and Spain have been able to sell their government debt is through moral suasion. They've been forcing their domestic banks to basically purchase this debt, which because the government needs to finance its expenditures. So if we have a situation where these Italian banks, who were basically the reason that interest rates are as low as they are today, if these banks in Spain or Italy are required now to sell off their government debt, we can expect interest rates to be rising in the next couple of months, which is going to put a lot of financial strain on the ability for either Spain or Italy to continue to borrow.
Now, Frank, according to some analysts, one of the potential spillovers of the deal could be the knock-on effect with regards to funding. Given that they typically fund themselves on a combination of deposits, equities, senior and subordinate notes, could it be a knock-on effect indeed that the Cyprus bailout will make banks more likely to use contingent convertible bonds? What do you think about this?
Well, as you know, I've pushed the idea of a Chicago plan. And what the Chicago plan would do is banks would be funded mostly through equity, and they would not be funded through deposits. Okay, so I can only view this as a positive effect in the sense that banks would be financing themselves more through equity than through deposits.
Frank, thank you very much for your thoughts today. Pleasure having you in as always. Thank you. Well, that's all from Frank and myself. Don't forget you can keep up to date with all the latest financial news by clicking back to Dukascopy TV. Goodbye for now.